The following is a presentation of TFNN.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. Do you believe in miracles? Yes!
Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the July 8th marvelous Monday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely, folks, I mean absolutely, treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. So, let's go look at one of our tools. Hope everybody out there had a fantastic 4th of July holiday. Nothing like a little bit of vacation time just to kind of relax and, re-energize. So let's go start with one of our tools. This is the tool I call the journey of 1,000 miles begins with one step. It's an ancient Chinese philosophy out there, and I think it should be each of ours as well. You know, perhaps one of the most important and meaningful journeys that we make is that of finding our place in the world. Sometimes you need just a little bit of a holiday break in order to be able to do that. You know, the key to that journey, though, is taking steps. And if you have great ambition, take a big step. In fact, take as big a step as possible in the direction of fulfilling your ambition, whatever it is. And if your step is but a tiny one, well, don't fret, for perhaps it is the largest one that you can take at this moment. Now, should you take a tiny step, always remember that at some point you'll have to take a big step, what I call taking massive action. You know, on a visit to Sir Jacob Epstein's studio, George Bernard Shaw, the co-founder of the London School of Economics, he noticed a huge block of stone standing in one corner, and he asked, he said, "What is that for?" Epstein, the sculptor, said, "I don't know yet. I'm still making plans." Shaw's reply was, "You mean you plan your work?" Shaw, the playwright, he said, "I change my mind several times a day." Epstein's reply was this: "That may work well for manuscript, but not with a 4-ton block of stone." Planning was a first step for Epstein in his art. Question: do you have a 4-ton brick in your life that you need to start making a plan for? Look, by taking the first step, small or large, you've got to take a step, because the journey of 1,000 miles, well, that begins with the first step. So I say, thank you, thank you, thank you. I want to express my sincere gratitude for each of you that took a tiny step to sign up. Maybe it was a large step to sign up for my free 2-week test drive of my newsletter service, Mastering Probability. In fact, if you overlook that opportunity, I would say act now, because I know our programming staff, they're in the process of taking whatever steps necessary to remove that offer from the homepage of TFNN.com. I did notice that it was still up there, so if it was just something that slipped your mind, go take that step right now. Let's go check out these markets. Let's go check out the steps that we've got in the markets here right now. You've got Dow futures up 56 points, trading out at 15,130. ES Mini trading up almost 7 points at 1634, we'll call it. The NASDAQ futures up 0.5%, up 15 points at 2971. Russell 2000, well, we're going to take a look at that. That got over the swing point high for May 22nd, so we most certainly have to take a look at that. King Dollar back 10 ticks this morning, trading out at 84.58. Not a ton of movement here in the currency market, not like the fireworks that we saw on the 4th of July. Metals market, a little bit different story. You got gold up $17 right now, trading out at $12.30. Silver's up 28 ticks at $19. Light sweet crude, how about this? Back 54 cents. We're certainly going to take a look at that stock chart. That's trading out right now at 102.68. Around the globe, let's take a peek here and see what we have going on. Over in Asia last night, just an absolute bloodbath. And key, quite frankly, is going to be the Nikkei. We're going to take a look at that stock chart as well. Nikkei down 200 points, trading out at, or closed out, I should say, at 14,109. Hang Seng down 272 points. That was down 1.3%. Over in the Shanghai, that was off 2.5% last night, down 51 points out at 2049. Over in Germany right here, they're having a big party out there. You got the DAX up 180 points. That's up 2.3% out there. The FTSE up 81. Of course, they just are getting in on the action that we left them in the dirt, or our markets left them in the dirt on Friday as their markets were closing. Our markets were just making their way down to a trend line where they just simply bounced off of that and closed at their session highs. Our call-in number, you know it, 877-927-6648. Give us a call. Be happy to take a look at your stock chart. Now, I'm going to first switch over here and take a look at the international markets. I want to see what's going on here because, success leaves clues out there. And if we take a look at the Nikkei, I want to start off with the Nikkei. It actually had what is potentially a key reversal session last evening. It actually gapped up on last night, on Sunday when it opened. Got up, the actual high was 14,497. The actual open was 14,491. So we can say it opened at its highs and then continued to sell off. Now, if we take a look at retracement levels, we've got to understand the Nikkei has had a 22% decline from its high on May 23rd, ours was May 22nd, all the way down to the low that was put in this case here, on June 13th. So a 22% decline in 16 days' time. What it did, in essence, last night was what everything normally does, which is makes that 0.618 retracement. So if you go from the high from May 23rd all the way down to the low on June 13th, 14,595 is the actual 0.618 retracement. Actually got up to 14,497. So 100 points away on a $14,000 instrument. It's certainly within range. More key, though. And, the question is, was this really extended? You see, a key reversal day needs really three things. Number one, you need to exceed the prior day's high and low. Well, in the case of the Nikkei, it most certainly did that because the prior day's high and low, the July 5th session, the low was 14,149. The high was 14,309. We closed at 14,109 yesterday, so you made the low. The high clearly was above that because you gapped up in yesterday's session. So we know that we accomplished that first outcome. Second outcome, it needs to close in the opposite direction of that trend. Well, it most certainly did with a lower close. And then third, you need to be in an extended condition. Now, I love to be able to utilize that relative strength, relative weakness indicator out here as one of our tools. We most certainly didn't do this. Could it be an extended condition? Yeah, because if we take a look at the pattern out here, what it really formed was a Gartley cell pattern. Here's what that Gartley cell pattern looks like. And take a look at that great Fibonacci relationship of numbers out here. You got the 0.618 retracement. We already covered that. That's from the high down to the low. If we take a look at our B to C swing point, we can see an expansion of that B to C swing point was 2.618. Look, there are basically 5 or 6 Fibonacci numbers that you want to have just totally, entrenched, glued, written down on a piece of paper, whatever it might be. You want to make sure you're taking a look at 0.382, 0.618, and 0.786. Those are your retracement numbers. Then you want to have, we're going to call it 6 then, 1.272, 1.618, and 2.618. Those are your expansion numbers. In this case here, you had a 2.618 expansion of a B to C swing point, which is really your A to B equals CD, and that's why I say that in the case of the Nikkei, it most certainly qualifies as an extended condition out here. So the Nikkei, it gave us a key reversal day at an extended condition. It's done it all. It's made that 0.618 retracement. And what this actually could be saying out here, which is pretty amazing, you're taking a look at if this is in fact the C to the C leg now, which was formed last night. You're looking at a move from 15,942 down to 12,004. So let's see. Let me do that. That is 12,000. It's 12. I should have done this ahead of time. What is it? It's several points, about a 2,500 point move. It's next 2,500 point move to the downside. How's that? Look, at a minimum, what happens when you get a Gartley cell pattern, in this case here, is a retracement back to the 0.618 level. So if we just simply take a look at that measurement says 13,211. is back on the horizon for a move down inside the Nikkei. What that really says is that the Nikkei will come back and at least test the swing point from June 13th. The high of that level is 13,050 out there. Now, it's important to be able to put all these markets, they somewhat work in unison, so it's important to be able to take a look at what's really going on around the world. Now, if we were to just take a look at what's going on in Germany, over in London, you would say, what a party they have going on out here. Well, let's go take a look at that party and see if it's really a party out here. Well, really, all we see, and I've got the FTSE up on my screen if you're watching us on TigerTV. The FTSE had gapped up. Let me just refresh my screen. Now, the FTSE is 10% off of its high. So its first leg of its correction was 10% off of its highs out here. It gapped up on Friday, after the holiday out there. So not a big, huge deal. Went ahead and closed towards its session low. And all we see here today, even though you've got the FTSE up nicely, no question about that, but you have to put it in perspective. The FTSE's up 1.3%, up $79.62 right now. What we're really looking at here is it's nothing more than an inside day inside the FTSE. So I say you got to hold that celebration. You got to put that celebration on hold for the moment. If we go take a look here at the DAX, let's go see what the DAX is doing. The DAX here, also, the DAX actually closed at its session lows, and it did that on July the 5th, on Friday. And if we take a look at the DAX, even though it's up 2.2% here right now, it's just having an inside day. This is not a big, huge move inside the DAX. The DAX still has your A to B equals CD pattern on the way down. Only if the top of Friday's candle gets taken out, that high is 80.31, then maybe we're taking, and even at that stage, it still has not even made the 0.618 retracement. So the DAX is in some really big trouble out here. Because, see, the DAX on its first leg down, coming and kind of put this in context of what our markets are doing right now, and we're going to certainly take a look at this. But I think it's important to also understand the bigger picture out there so that you don't just get carried away with regard to take a look what numbers might pop up on a screen, because if you opened up, if you were watching whatever it might be, CNBC, what have you, you would say, wow, what huge moves it is we're having. Just take a look at what's going on in Europe. Well, let's take a look at what's going on in Europe on their stock chart. And if you go from that swing point high, May 22nd, down to the low that came in here on June 24th, just as our markets did, just to understand how weak it is over in Europe out there, all that the DAX has been able to do is a 0.382 retracement. So the party that they've got going on here right now, not much of a party at all, because if that is all that's done, if the highs here of Friday, 78.06, do not get taken out, and even if they do get taken out, but if they don't get taken out, folks, it says a 1 to larger than a 1 to 1A to B equals CD down. You'd be looking at probably about 68.88, 65.78. It's trading at 79.78 here right now. Even if, though, the party does continue, the party inside the DAX should end right around the 82.13 level. 877-927-6648. Give us a call, folks. We can take a look at your stock. When we come back, we'll go take a look at our futures market, and we'll go see what they've traded into. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks, and a quick thank you to Philip, Abdul, Francis, James, and Michael. They're taking advantage of the fact that the opportunity to test drive Mastering Probability, that link is still on the homepage of TFNN.com. So, everybody coming back from a holiday weekend, that link will not be up there long. So if you have not had a chance to take advantage of it, now is the time to act. We had a question. I was, fortunate enough while Tom was on vacation last week to fill in and do his shows. I love doing the 4 to 6 o'clock hour, and had a call come in from Germany, from Tom in Bamberg, Germany. He sent me an email. I did ask him to go ahead and follow up over the weekend. He did that. And his question, I want to get to his question, and we'll do that here during the show this morning. But his question was this. He said, aside from the signals from the VIX, and we'll talk about that this morning, what pattern in the S&P could you put together whereby the likely A to B equals CD down pattern would in fact turn into a continuation of the longer-term bull trade? He says, just as you had been contemplating a number of forward-thinking scenarios for a negative trend, is it too soon to put together some projected paths if the trend turns positive? So I think it's a great question. We didn't have enough time to answer that really during Tom's show, so I'm not going to try. I am going to go ahead and we'll answer that question during the show today. But first we're going to start off by taking a look at the ES Mini. So as the ES Mini was making a high this morning here at 6:30, got up to 1638. What it was also doing was it was making a 1.618 expansion, a little butterfly expansion pattern. And that was coming off of the swing point right back here at 12:30 in the afternoon on July 1st. That high was 1620.50. If you go from that high and that swing point all the way down to the low that was put in here at 4:30 in the morning on July 3rd, that low was 1594. If you take the difference between those two, you multiply that times 1.618, you add it to the low of 1594, it's going to get you right into that 1637-ish range. In fact, the exact number that it would give you, I'll go ahead and give you that number. The exact number, 1636.88, would actually be the number out there. What we can see taking place, and this is why you want to understand expansions of swing points, A to B equals CD patterns, the whole Megillah, the whole kit and caboodle out here is because it'll help you to identify projections. It'll also help you to identify where you may start to see reversals. Now, if we take a look at as the 1.618 expansion was being formed out here, what you also saw were a couple little doji candles. Now, we had this wide-ranging bar at 5:30 this morning. That was just simply getting in on some of the action, some of the euphoria over in Europe out there. I suppose that's what it was. We really don't need to know what it was. All we need to do is pay attention to that bar. So as the 1.618 expansion was being formed, you got two doji candles, a nice little small body after that. I was telling you that the market was tired. Also, if we take a look at that relative strength or relative weakness indicator down here on the bottom, you could also see that it was getting into the overbought territory. So if you were long, it would have said, hey, you know what? You need to either start taking your profits, go ahead and take your money off the table if you were long, or at least start putting in some type of stop, some type of adjusted stop. Now, the question would be, where would that adjusted stop be? Pretty simple. It would be a close underneath the bar from 5:30, because that wide-ranging bar, the open of that bar, 1632.75. We're not there yet. Right now, we're trading at it right now. But if you get it closed, and it's a 30-minute chart that we're taking a look at out here, that would be a time where you would start to say, maybe this is, maybe we've seen the highs. And the reason why you would do that is because the normal retracement of that pattern, we're going to go ahead and take a look at it. A normal retracement is going to be to the 0.618 level. The 0.382, the dead cat bounce, would be really normal. That would just be, the most normal move that you would have out there, and that would be 1621.19. The 0.618 retracement would be 1610, and there would be no reason to go ahead and take that kind of heat out there. Now, why do I say we just simply take a look at that wide-ranging bar? Because bars give you a ton of information out here, and with that wide-ranging bar, all we might see right now is the market just simply doing what it should do, which is work off an overbought condition. We know it was in the overbought territory. You expect it to pull back in this wide-ranging bar. Now, on a 30-minute chart, this is a wide-ranging bar out here. Gives you a ton of information. And this is telling you right now that there may be some bulls hanging right out at about that 1632 level. Now, this can go ahead and push down through it. It's really the close that you're taking a look at, because the bar itself, the body, is truly the essence of price. The extremes are really the wicks, the upper part of the wick or the lower part of the wick out here. So at this stage, if you were long, this is what you would be paying attention to. If, in fact, this pattern here fails, and by failure, I mean the ES Mini does not pull back to 1621 or 1610, what we're actually looking at is a move up to probably about 1645 to 1649. That would be quite a move upside. That's why you want to manage your trade out here and be paying attention to the signals of the market. 877-927-6648. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. The Art of Timing the Trade charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 75 points, trading at 15,211. S&P up 8 at 1639. Composite up 15 at 34.94. Russell 2000 up 3 points at 1,008.47. Google up $4. Apple up 2 1/4. Microsoft up 10 ticks. Intel back 38 pennies out here. Leading the charge to the upside, it is Priceline up $21.78. Apple right behind them up $1.76. Stratasys, 3D company out there, they're up $2. You've got Celgene, CELG is their ticker symbol. They are up $1.67 here right now. Goldman Sachs up $1.10. If we take a look at what's moving to the downside here, you got Noodles and Noodles. It's actually Noodles and Company, NDLS. They are the IPO, I believe, came out last week. Trading back a little bit here. You've got Canadian Pacific Railroad. Oh, man, after that nasty accident, I imagine that is the rail line out there. They're down only 1% off $1.38 right now. You know, a lot of nasty stuff in the news over the weekend. Thank goodness over in San Francisco that the loss of life was really minimized with a airplane accident like that. So in any event here, we've also got to the downside, you've got Malin, boy, I can't even pronounce this ticker symbol, or the symbol, pretty simple, MNK, Malin. That's about it. That's all I'm going to go to. It's off 2% here this morning. Union Pacific Railway, they're down 0.7% off a buck. You've got Intel down 42. Not a ton to the downside here just yet. Now, I'm going to go over and take a look at the currency market here for Angie in the Tiger's Den, the Tigress in the Tiger's Den. She wanted to take a look at the euro. So I'm looking at the euro-US dollar currency pair. She's in this trade to the downside, and it is a nice trade, no doubt. It formed a 0.618 Gartley sell pattern. I believe that is likely going to, longer term, turn into a 0.786 Gartley buy way down at about the 124 level. Right now it's trading out at 128.68. Now, what we can take a look at today is, or we'll take a look at what it did actually on Friday. Friday, we saw big moves inside the currency marketplace. And those big moves inside the euro, what it did was it took it down to form that 1-to-1, 100% move of a move, or very close to it. The actual move of a move, 100%, if it was, right on the spot, would have been around the 1.2743 level. It didn't get all the way down there. It did careen right through the 0.786 retracement level. I would say this on the daily chart here, and I don't know what Angie's longer-term picture is, unless there gets to be a close above Friday's open. That price level is 1.2912. All that we're doing right now is just really moving sideways. If we take a look at, there have been no bulls inside of the euro-US dollar other than on one occasion, which was right here on July 1st. On July 1st, you had a bullish engulfing candle. But the key to that, just as we were taking a look at on the ES Mini on that 30-minute chart here, if you take a look at what it was trading into, yes, it was a bullish engulfing with regard to the prior candle. But what it never did, you never got a close above that June 26 level. All it did was just simply bounce around inside there. And so in essence, what you really received was a continuation pattern signal here on the trading session of July 2nd, because you never closed above that body, and once you got below it, which we did here on July 2nd, that was your continuation signal. Now, if we take a look at it, the only possible way to get a bullish engulfing candle or a bullish reversal signal is going to be a close above Friday's open. And if you do get that, then you have to say, well, you know what? You've made that 100% move of a move. You just got a bullish reversal signal. Yes, it's still in a downtrend. Where is this likely going to bounce to? The bounce would be nothing more than going from your C to D leg, because I think this is a larger A to B equals CD down. So that would be the high of June 18th, down to the low so far of Friday's session. And your 0.382 level would be 1.3037. 0.618, which it could get up to, would be 1.3181. And you just simply have to do an analysis of risk to reward out here and whether or not you want to actually time the trade. But right now, on the daily chart, to me, this says stay in that trade until you get a close right now. If it were to be a close today above the open of 1.2912, then that gives you, then you've got to make a different trading decision. So I hope that, Angie, that helps you out inside the den. And since it's a longer-term trade that you're taking a look at versus a 30-minute chart, I really think this is the only chart that you really need to be paying attention to. Let's go take a look here at some of these, as long as we're in the currency area. Let's go take a look at let's actually take a look at gold, silver, light sweet crude, bonds, see what we have going on out in this marketplace here. Here is a weekly chart. The weekly chart suggests to me that we could see one heck of a bounce in. Of course, I've been calling for this for a week here. We could see one heck of a bounce inside gold. Just simply today at 3:30, we'll have the commitment of traders data out to see if there's been any change in the commercials net short interest, and quite frankly, they're close to net long, which they've never been in, and we'll take a look and see what the non-reportable. So I'm looking forward to taking a look at that data sometime this evening, see if there's been any change in the CFTC commitment of traders data. But right now, they are suggesting that we're seeing a nice bottom here inside the metals marketplace. That's the weekly chart. If we go switch over to a daily chart of gold, gold right now is trading up, boy, there's about $18 here. So as we take a look at the daily chart itself also needs to move outside of the well, it's possible that what we've seen here is just a small A to B equals CD up. That would be forming your A point just down here from the low that came in on June 28th. Your B point up at the July 2nd high, and your C point being the 0.618 retracement that was done on Friday. So that takes gold up to the 13.18 to 1 to 1.272, and I suspect that's really where we're going to get a release of information, which is going back and testing the low, that high volume low from April 16th out there, 13.2150, and it does look like that is where gold wants to, at least at a minimum, trade into. And we take a look at silver here right now. You've got silver trading up 30 cents, up 1 6/10%. Not a big deal out there right now. What silver needs to do, which it has not done, it's that bar right here from June 26th. That high is 1958. We need to see it close above 1958 to really give you the potential bullish signal out here inside silver. So right now you're just having an inside day trading towards the session low. The session low, I should say, of Friday out there. So not a ton of bullishness in the look of the stock chart out here, at least from a candlestick standpoint. If we go take a look at light sweet crude here, broke out of this sideways trading range, a 14.1 year sideways trading range. It gives a ultimate outcome or objective of a minimum of about $114 inside the case of light sweet crude. Now, we like to use our trend lines. You got horizontal, you've got diagonal trend lines out here. In this case here, the diagonal trend lines, the price channel, we can see that what light sweet crude did on Friday was it moved right into the top of that channel line. And what we've seen here, ever since it came back online, we started to see light sweet crude trade off. Still pretty close to a dark cloud cover candle. Needs to get into about the halfway session of the body of this bar here from Friday, and it's pretty close to it. I would say a close below what I'm really looking for. Here's what I want to see. I want to see light sweet crude get all the way back down to that $99 area. I want to see it test the top of this horizontal trading range, the consolidation level. I want to see whether it rejects that area or whether it gets back inside, because either of those set up very nice trade opportunities out there. So I'm pulling for this to pull back only because it gives you the best reward to risk trade in light sweet crude. So we'll see if it does that. Right now, it's got the real opportunity to do that because it ran into a resistance area of that rising price channel. So a pullback now to actually test the breakout area is what would be in order. So hopefully we'll get that trade to we'll get light sweet crude to do that and give us an opportunity to take a trade on that. If we take a look at the 30-year Treasury out here, 30-year Treasury, broke through another support area on Friday. If we take a look at today, it is trading up, but that certainly is not a bullish candle. Just like we took a look at on the euro, as we took a look at the ES Mini out there, in order for bonds to get any kind of bullishness, and I would say bullishness only from this standpoint, folks, what you want to be looking for is you want to be looking for places to go short the bonds. I don't recommend, especially when you take a look at the C to D leg here, take a look at this move. If you thought that there was a decent move off of the top out here, off of the high, and this is not the actual high, came in now clearly on the July 25th date, but what it did was really consolidated for a period of time out here. So if we take a look at coming off the November 16th date out here, your A to B leg, take a look at the C to D leg move. I mean, this is a major move on the left-hand side of that formation tool, and that says that this is a major move on the way down, and what you should really be looking for are places to possibly short the bonds. And where would those places be? Right now, you're taking a look at the bar from Friday. Let this thing, maybe this will get up and test the bar. that open is 135.15. If it gets up there, tests it, rejects it, that might be a place to step in on a TBT trade. This is the one that's going to be a little bit more difficult. You're going to have to look at really some intraday patterns. I've got a consolidation line really drawn. More important, the bottom level, and that would be the price area of right about 135.07. I would think that would be a nice area in order to be able to short it. So you'd have a couple of different things setting up here. You would have a test of the bottom of the we'll call it a consolidation area where it broke out of, and a test of that bar from Friday out there. And if you get all those things, then maybe that is a place to go ahead and go short the bonds. If we take a look at natural gas, see what it is doing out here. Inside natural gas right now today, breaking inside that rising price channel out here. So we'll see if that will hold. If it does, then that sets up okay. Then you do have a buy pattern that would be in place here. You'd want a little bit more confirmation of this, but if it gets inside that rising price channel, that sets up a move all the way up to the top of that rising price channel. That price area somewhere above 440. But we'll take this one moment at a time. I'm going to go over now and take a look at the I want to take a look here at the market. So we got the market. The Dow's up 78. The S&P is up 8 points. NASDAQ is up 12 out here. And the New York Stock Exchange is up 0.5%. Now, that's key. It's up 48 points. I want to take a look at net advancing issues out here, which is a positive 13.14. So market breadth is pretty decent here early on at 9:46, only 16 minutes into the trading session. The number you want to write down on your pad of paper today, I know you've been waiting for this number, it's 825. 825 or more in net declining issues, and in the football game of these markets, the Bears will officially have taken control of the ball out there. So that is the number that you want to be paying attention to, and that is as we come into today's close, not the number of where we are trading at right now. So now I want to go take a look at the actual daily futures contracts out here and take a look at some of the patterns. So if we take a look at the Russell 2000, the Russell 2000 has come back and has tested the high from May 22nd, that number, 1008.40. So the Russell has made a move of a move out there. So you've got that pattern. Now the Russell, as we know, has been the strength inside the marketplace. So where the Russell closes today is very key to being able to give us a signal. So going back to Tom and Bramberg, one of the things that we're going to take a look at to understand whether more likely this could be a real breakout in the market, even though we've had extremely light volume on the way up, one of the things that we're going to be paying attention to is the IWM, is the Russell 2000. So here's the daily, here's the futures contract, and the next show is when we take a look at the indexes and the ETFs out there, just so I can spread things out over a period of a couple of hours out here. So you have seen a move of a move inside the Russell. That's the first area that we're going to be paying attention to. If we take a look at the, let's go take a look at the S&P 500. The S&P 500 on Friday moved right into the 0.786 retracement off of its shorter move. That was your C to D leg of that A to B equals CD down that completed on June 24th out here. And the 0.786 level was 1628. You actually closed at 1629 on Friday. Now what we are seeing is a test of the 0.618 retracement of the larger A to B equals CD down. The actual A to B equals CD down, meaning from the May 22nd high down to the low on June 24th. That number, 1635.14. You're trading at 1636 right now. So we are right inside the range of where the price was supposed to, on a normal basis, just simply bounce back into. We've seen that. We've seen this on light volume. Key today is going to be the volume behind this move. We have not seen any volume on the way up, and certainly with a lightened trading session with the holiday weekend out there, hard to totally gauge. Well, it's easy to gauge volume, but really hard to truly gauge whether or not the lack of volume, just the meaning behind it, I should say. So instead what we take a look at here are the actual retracement numbers. Now, if there's a breakout, meaning if you get a decent close above 1635 today in the futures, that sets up really two possible moves. Well, it sets up two moves for sure. Well, one move for sure. The one move for sure is getting back and testing the June 19th high. That will be a 100% move of a move. Coming back to the swing points of June 19th and June 18th out here, those highs 1648.75, 1649. That's really the number we're going to take a look at. If you get a close above that, that is setting up a larger sell pattern with the market moving up into 1663. So if I go back and take a look at that 30-minute chart on the ES Mini here, the 30-minute chart, remember we were saying until you see a close below this bar, which we have not seen, that was a bar coming into 530, that sets up a potential move here just on the shorter term chart to the 1645, 1649 level. 877-927-6648. We got the Dow up 90 points right now. S&P is up 10. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed down a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. So, in answering Tom in Bamberg, Germany, his question, we're about, what since we've been taking a look at the markets here forming the C point of an A to B equals CD down, that's really based upon volume. One of the answers is we have to see volume come into the marketplace that totally says, so this move that we see today, you're going to need to see volume come into this marketplace to say that the C point is not being formed and that we are seeing, what we are seeing here is a new uptrend coming off that June 24th low out here. Now, what I also have on my screen right now, if you're following us on Tiger TV, I've got the top portion of the chart is the VIX index. And the bottom of the chart is the S&P 500. Now, you know that one of the, I use the VIX index for about 3 or 4 different trading patterns out here. One of those is understanding where the VIX is in relationship to the 50-day exponential moving average. Now, in addition to Friday's move, what we did see here in the VIX, as I blow this up on the screen, we saw the VIX dip below the 50-day. All moves in the market, if you go back and you overlay the VIX on the S&P, as I've done here on your charts, what you will see, and if you look at the bottom of the chart, you're seeing these large black lines out here. Each of those are where the market started moving higher, where the VIX had dropped down below the 50-day exponential moving average. So it's very key to be using this as another tool out here. And so when we take a look at Friday's action, you do say, okay, we're at a point in time here, we're at an important time in the marketplace where we're going to see either a reversal and a continuation in the trend to the downside, or we are truly beginning to see a move here to the upside, and so we're going to utilize the VIX as one of our tools to be paying attention to. Right now, you've got the VIX at 1481. The 50-day EMA is 1574 out there in the marketplace. So as we speak right now, it is confirming the up move out here. If we take a look at the larger patterns, what I mean by the larger patterns is if I go over and take a look at the Spider weekly charts out here, and that's really the 9 different sectors within inside the S&P 500. First, we started off here with the actual SPY, and the SPY on the weekly chart out here, that still calls for a test of the 147.50 area, and that would bring it down right into the bottom of this rising price channel. That would be your normal move during the unfavorable seasonal cycle that we are in. But if we take a look at inside the sectors out here, and this is really key, what that's going to require in order for that type of move to take place, that'll probably require the XLK, which is the technology sector, which is the largest weighting inside the S&P 500, to most likely go ahead and break the top or the bottom of this rising price channel. So I would say that the most bullish stock chart out here right now happens to be the largest weighting with inside the S&P 500, and that is the XLK. It's had a nice move here the last couple of weeks. However, this is a weekly chart. Remember, when we take a look at this bar here, just like we looked at on the Euro, just as we took a look at on the ES Mini, just as we take a look at on basically everything, this bar here from June 21st is really key, Tom. The bar on June 21st inside the XLK, and I'm talking about the week of June 21st, the open there is at 31.58. We need to see a close above 31.58 inside the XLK in order for the scenario to unfold that what we've really seen here is the bottom of the marketplace, because all we're seeing right now is trading with inside that large downdraft bar out here. And with this being the number one weighting inside the S&P 500, this, because you are more of a midterm trader, is what I would be keeping my eye. That's my eye on the 8 ball. Folks, it is the end of our show. Stay tuned. We've got the Money Masters show up next. We have Basil Chapman following that, Larry Pesavento after that, Daryl Martin 1 to 2, David White 2 to 3, and the Tom O'Brien show from 4 to 6. He is back in the captain's seat. Remember this, folks, you have an amazing power within yourself. That power, it's so strong, it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, but most of all, folks, create fantastic, loving families. Thank you so much for being a part of the TFNN family. Look forward to seeing you soon. Have a great Monday.